All right, hey guys, good morning. It is 9:52. We've sent out some trade ideas and recommendations here this morning about trade management of existing positions we have on. And I just want to go through with you what it is that we're seeing and why we're doing what we're doing. First of all, let's start with Kansas City wheat, okay? Kansas City wheat, we exited the short portion of the futures position that we had on. We had sold futures and sold puts down here in order to manage the downside risk there. And we've talked about this yesterday that if this $8 level holds, then we would key exits on corn and wheat off of that. And it's held so far today. And what we did is we traded below the we traded lower right out of the gate. And if you can see this on your screen, we actually traded the full bodies of these 2 days and then rallied and took out the tops of both of those days. So I wanted to exit right above those highs right here because we could get a short covering rally that can move fairly fairly significantly. Let me clean this up and show you where we could trade to and where we may look to resell wheat. But if we go from here down to the low and we move to a 38.2% retracement, that's 844. 50% is 855 and 61.8 is 868. So with the funds as short as they are, we could get the fuel up into these ranges, which is a point that we'll want to resell it, I think, unless we get some sort of news to the contrary there. So that's what we're looking at, and we may as well exit, move to the sideline for a little bit and see what happens. We're going to hold those short puts for now, and those are sold at 780. We're going to hold those for now, and we'll cover those up into this range right up in here and just get neutral wheat and wait for the next signal. Again, that's for spec positions only. That's not for marketing or risk management purposes. At this point, I don't see any reason to rush in and make any adjustments there. But if we do trade back up to this 850 level and some sort of bullish news happens, then we may want to look at it because it could push a little further. All right, corn, same thing we talked about yesterday. We haven't quite done as much bullish upward momentum as we have in the others. But what I don't like about it, let me move this over and put it onto the smaller time frames, okay? So this is your 240-minute chart. This is your 60-minute chart of corn. What I don't like is that we have this hook reversal yesterday with a follow through today. We've tested the bottom side of it and failed right at the bottom of this 1 hour cloud and right on top of this line right here on the 240-minute chart. So taken all together, I think we could pop another 15-20 cents in corn, which would put us right into, if we mark from here to here, another 15 cents from here would be about 55, which would be right at about the 50% retracement level. And if we're able to do that, then you got to look at what we're doing, which is closing back up above this range and holding this range. So if those two things happen, then we could accelerate corn just a little bit higher, and maybe, I mean, who knows what'll happen if we reclaim those. There is some news out of South America that the Argentinian crop is just getting worse and worse and worse. So that could be the bullish fodder. And there's also some rumors of some big purchases. So I just don't want to be naive. Nothing's changed longer term. I think we're going lower in corn. But if we can pick up 15, 20, 30 cents here and improve our positions, then that's what we want to do. All right, soybeans. This one's probably the one that's got us the most interested, because this doesn't make sense with a big down move. So what we have right here is the beginning of a 3-day formation called 3 inside up, where this big down day that we have here is about to be fully retraced. So this day traded inside the full body of this range, and now we have follow through to the upside. If we're able to reclaim the full body here, that's a 3 inside up and may push us all the way up to new highs here in soybeans. So again, like corn and wheat, this doesn't make sense with what we think we know. So we just want to be realistic and recognize that prices can move higher because somebody may know something that we don't, and push us on up. The only thing we've seen is some rumors that maybe the Argentinian soybean crop is down under 30 million metric tons. And if that's the case, then that might necessitate higher prices. We've been in that 35 to 40 range, and 28's that's put it in context. That's 400 million bushels less soybeans than we thought we had. So that could result in some higher prices. So we broke it. We didn't even get to the 38.2% retracement. We held these lower levels, and now we're tracing a new bullish pattern. And if I drill down into this, into the shorter term charts, let me put this down to a 60-minute. And one of the things we can look at here is whether or not we're trading inside parallel lines. So if I snap, oh, I hit the wrong button here, so hold on. So if I snap a trend channel off of this low right here and move it up to the top of the intermediate point, you can say we blew through the trend channel right here. So, and then if I add the cloud on top of this, we've also blown up through the 1 hour cloud. So when you see the 1 hour cloud give way and you see this trend channel that's no longer between parallel lines, something is more bullish here than we know about, and so that doesn't make sense. So that's a sign to cover short futures, move to the sideline on them, and just kind of let the market tell you what it wants to do before you take any new positions. All right, that's what we're doing. That's why we're doing it. Again, these are not marketing recommendations. This is speculative only. But for those of you that enjoy that side of the business and like to learn and get educated, that's what we're looking at in real time here at 10 a.m. On Thursday, and we'll see how the day ends up. All right, we'll talk to you later. Have a great day.